After extensive discussions, the MPC voted unanimously for a reduction in policy repo rate and for maintaining the accommodative stance of monetary policy as long as necessary to revive growth and to mitigate the impact of COVID-19 while ensuring that inflation remains within the target. On the quantum of reduction, the MPC voted with a 5:1 majority to reduce the policy repo rate by 40 basis points, 40 basis points from 4.4% to 4%. Consequently, the MSF rate and the bank rate now stand reduced to 4.25% and reverse repo rate stands reduced to 3.35%. Before I lay out the backdrop, the rational and expected outcomes of the MPC's decisions, I wish to thank the committee members for their valuable contribution during the deliberations. India's foreign exchange reserves have, however, increased by 9.2 billion during 2021, that is from 1st April onwards, and so far, that is up to 15th of May, our foreign exchange forex reserves, they stand at 487 billion US dollars, which is equivalent to 1 year's imports. GDP growth in 2021 is estimated to remain in the negative territory, with some pickup in growth impulses in H2 2021 onwards. The end May 2020 release of NSO on national income should provide greater clarity, enabling more specific projections of GDP growth in terms of both magnitude and direction. Much will depend on how quickly the COVID curve flattens and begins to moderate. The RBI had announced, on both these occasions, certain regulatory measures pertaining to granting of 3 months moratorium on term loan installments. That is the first one we had announced. 2, deferment of interest for 3 months on working capital facilities. 3, easing of working capital financing requirements by reducing margins or reassessment of working capital cycle. 3, exemption from being classified as defaulter in supervisory reporting and reporting to credit information companies. 5, I think 1, 2, 3, 4, 5, I'm just listing out. It's possible that it missed to, that exemption probably was number 5, exemption from being classified as defaulter. I think that was 4. The 5th point is extension of resolution timelines for stressed assets. And the 6th point was asset classification standstill by excluding the moratorium period of 3 months. So all these measures we have announced on 27th of March and on April 17th, essentially arising from this 3 months time we gave 3 months moratorium we allowed on the term loans, then on working capital we allowed certain relaxations and associated measures. In view of the extension of the lockdown and continuing disruptions on account of COVID-19, the above measures are being further extended by another 3 months from 1st June till 31st August, taking the total period of applicability of the measures to 6 months.